What makes up your credit score? There's 5 factors. The first factor, which makes up 35% of your credit score, is your payment history. Okay, so payment history is simple. Do you make your payments on time? And if you have, great, it's going to impact your credit substantially. If you haven't, it's going to hurt your credit substantially. Okay. The second factor I look at consists of about 30% of your score, and it's the amounts owed. And I'm going to spend a couple minutes on amounts owed because this is where I'm able to help improve your credit score substantially in a very short amount of time. So for example, if you have a credit card, a Visa card, and the limit is $10,000, you have a $10,000 limit, but you owe $9,500, that card is considered maxed out. Therefore, your credit score is going to be held down or hurt substantially because you have what's considered a maxed out trade line. So there's tiers that will help improve that score. So the first tier you have is maxed out. 70% to 90% is considered the next tier down from maxed out. 50 to 70%, 30 to 50%, 15 to 20 or 30%, and then anything under 10%. So if you owed $1,000 on a $10,000 card, you would reap the benefits of basically having a zero balance. So we want to work under those tiers. Most people that owe $9,000 can't necessarily afford to pay off that credit card. So if you can afford to pay it down to 50% or 70% of the max, that should be the next tier that you should focus on. And each time you go down a tier, you should be able to increase your credit score 10 to 15 to 20 points. Okay, so that's the second factor. The third factor is length of credit history. Okay, and that's gonna take up or be responsible for about 15% of your credit score. Okay, and then the third, new credit. New credit is referred to as inquiries. Have you applied for new credit? Keep this in mind. If you're applying for a mortgage, try not to go out or do not go out and apply for new credit. It will hurt your credit score. And then the last thing is the types of credit that you have. Ideally, in a perfect world, the credit bureaus would like to see, the credit scoring model would like to see you have a mortgage, an auto loan, 2 or 3 revolving trade lines, and that would basically make up a perfect, if you will, a perfect credit scoring scenario for you to achieve an A+ credit rating. In the meantime, if you don't have a mortgage, if you don't have an auto loan, if you don't have revolving, work toward that by taking on those types of credit accounts. All right? I hope that helps. Now, let's talk real quickly about if you don't have a credit score or if you've totally missed the mark in regards to credit score. We need to go in and we need to get some of the negative stuff removed. I've aligned myself with a great credit repair team. They're very inexpensive, and again, results are normally seen within 90 days, okay? If you do not have credit, we need to start establishing credit. I've got 2 or 3 strategies that can help you improve, build a credit score or improve a credit score in a very short amount of time too. So don't write yourself off if you do not have a credit score. Don't write yourself off if you've missed the mark in regards to credit. We can help you. Continue reading this ebook and feel free to contact me if you'd like more information on credit repair, okay? Take care.